Banks begin hiking mortgage interest rates. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's have a look at this article. And I know I don't have a stein today. Let's have a look at this article from Yahoo Finance discussing major banks hiking their interest rates. Now, there are a lot of people that are concerned that you've got people jumping into property and all they're worried about is just their ability to make payments. Now, our cash rate is at an insanely low level. Back in the day, 3% was considered an emergency level. We're at 0.1 now. And what's even more funny is the ASX... Hang on, I got to jump to this screen. The ASX rate predictor is saying that, at the moment, an 87% of a chance to decrease the cash rate to 0%. I mean, I don't think that would make any difference. It might actually even have a negative impact on people. So, one of the big four has already started to increase its rates. Now, those of you that remember the recession Australia had to have and how high interest rates went back then will understand that this might be concerning to some people if rates creep up. Even a little bit. It wouldn't take much of an increase. It would, if we just got back to what was used to be considered emergency cash rates and that lifted up the bank rates, there'll be a lot of people that will struggle, that will have a tough time. I'm not, because you hear Martin North and all the others, they're talking about mortgage stress. I don't know if it's important anymore. I guess if you've had to struggle so long to put so much money aside just to get a deposit, you're probably used to having to save such a large proportion. So there's the question, is the old definition of mortgage stress incorrect? Spending 35% roughly of your gross income on a loan repayment. Should it be higher? What happens when it gets to 50? It won't take much for your repayments to suddenly creep up. And the risk is the people that jumped in the market now for FOMO, overextended themselves because it's all going crazy, interest rates go up and then they get into trouble. The Commonwealth Bank has hiked its 4-year fixed rate while cutting its 1 and 2-year rates in a sign the bank expects a higher rate environment to set in by 2024. So that's what they expect. The bank has increased its lowest available 4-year fixed rate by 20 basis points, taking it from 1.99 to 2.19. I locked us in on the 1.99 with our mortgage, simply because to stop me from paying it off too quick, because Rachel wants me to spend our money on our house renovation, not on getting out of debt. At the same time, it has cut its 1-year rate by 10 basis points to 2.09%, and its 2-year fixed rate by 20 basis points to 1.94. CommBank's move makes it the first major bank to hike 4-year owner-occupier rates since October 2019. So there you go, everyone. It's gone up from 1.99 to 2.19. Now, that may not seem like a lot, but it is going to make a difference to your repayments, and it will affect people's ability to service their loans. I mean, these rates are so insanely low. There are going to be people that are entering the market for the first time just at these rates. They're not going to know what it is higher. They're not going to know the journey down to these rates, how all of a sudden you're just noticing that your mortgage is getting paid off quicker. Or that, oh, look at that. Let's see what the minimum payment is. Oh, wait a minute, look at that. And they're just going to know it going up and getting tougher. I'm hoping people haven't gone too close to the edge. Maybe I'm being naive. Rates are for owner-occupiers paying principal and interest on a package loan. The bank is giving with one hand and taking with the other, hiking its 4-year fixed rate by the same amount for new customers, Research Director at ratecity.com.au, Sally Tyndall said. It's not surprising CBA has decided to raise its 4-year fixed loan. The bank is pricing in at least one cash rate hike over this time. So they're expecting the cash rate will go back up. I think more and more people are expecting the cash rate will have to go up. But will the RBA be able to do it? They're probably going to push for more regulation on the banks to stop them lending. But here's the thing. Are the banks really going that crazy? Is there any evidence that it is? There's lots of people you're hearing that, well, are complaining they can't get a loan, like that young couple in Sydney. But when you looked at their situation with a child and no one in full-time work, that obviously isn't the banks going crazy. If they would, they'd be lending to people like that, wouldn't they? That's not an isolated incident. And we need to start realizing that grown adults have personal agency. We allow them to drink. We allow them to vote. We allow them to do a multitude of things. You're expected to have the mental capacity to handle these risky decisions. And yet there's more and more calls for intervention and paternalism on the behalf of the banks. Maybe that's just a sign that our financial literacy is non-existent. Or it could be because the media is just pumping us all up a FOMO that people are just frustrated and want to get into the market. So, the Reserve Bank of Australia Governor, Philip Lowe, has reportedly said the first round of cash rate hikes won't be until at least 2024, but that's only 3 years away. Well, yeah, you're right. These years are going quicker and quicker, everyone. Look, we're talking about Easter now. This year's just begun. 2021's just started. March is nearly over. She said other banks may also begin increasing rates in the next few months, as they also move to price in an official interest rate hike from 2024. Someone who fixed their rates for 4 years today could very well see variable rates go up within that time, provided the economic recovery stays on track, Tyndale said. Is it economic recovery or the overheating of certain sectors of the economy due to artificial stimulus? What's the difference to our pundits and politicians, eh? Just so long as it keeps the votes rolling in. While the Reserve Bank of Australia has kept interest rates at a record low of 0.1% for March, rocketing house prices and a faster-than-expected unemployment recovery has meant many economists are closely monitoring the RBA for signs it could increase rates earlier. House price increased 2.1% over February, the highest monthly increase since 2003. Completely normal, everyone, after the first recession in 28 years. No, they haven't overheated the market. I'm sure the RBA are masterful economic managers. Bank West Curtin Economics Canberra's Rebecca Cassilis has suggested the RBA may be forced to move in the second half of 2022. There's an increasing prospect of interest rates being lifted earlier than the 2024 timeline that the RBA has offered in recent statements. What do you reckon? What do you think that would do to consumer confidence? Can you imagine if they rose rates? Wouldn't even take much. You think there'd be, if they rose rates by 0.5%, do you think there'd be people already underwater going that close? There probably would be. It'd be shocking, though. It's such a little increase. And you'd be so close to the edge. I think that combined with the real unemployment rate, which is over 13%, looking at Roy Morgan. So this could be as early as the second half of 2022 if the labour market continues to respond and prices continue to push upwards, particularly through the housing market, she said. Whether this activity will be enough to reach the 2% inflation threshold will remain to be seen, but it's certainly more likely now than it was in early February. KPMG Australian Chief Economist Dr. Brendan Rain agreed, adding on Monday that the RBA may also have to review its timeline as the Australian economy strengthens ahead of schedule. We expect to see strong performance in the Australian economy, with GDP boosted by the unlocking of pent-up demand from a lockdown-affected 2020. But this will start to taper off in 2022. Here's the thing. How long will this demand, last? Will it keep going? And this demand, most of it seems to be pushed towards housing, not apartments. Our forecast on inflation rising and unemployment falling mean that by next year the RBA will come under pressure to review its pledge to keep ultra-low interest rates until 2024. The inflation genie is still in the bottle, but can definitely be seen edging up the sides. Now the thing is, what happens if they do keep it until 2024 and the market even overheats and then we suddenly get some very drastic interest rate rises? How many people out there could handle a 0.5% increase? How many of you can handle a doubling of your interest rates? You know, your bank going from 2% roughly to about 5% per annum. Very least then, we might actually be able to earn some interest on our savings in the bank. Wouldn't that be novel? There'd be a generation that's never experienced that. So there's two sides of this. What do you reckon? Let us know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I cobble together here, there are a few ways you can support us. Simply by watching and sharing the channel. You can join us on YouTube or Patreon, support us using our affiliate links on Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, have a great day, and I'll see you all next time. Bye for now.